Hello, traders, and welcome to the Friday Wrap-Up, June 12th, 2015. Traders, coming to you live from Pattaya, Thailand. Remember, this is brought to you through FXCL Excellence in Trading. Traders, this Friday Wrap-Up, we're going to go over probably about 15 daily charts, and we're going to talk about some commentary and a little bit of news data. So we got a lot to do in a short amount of time. Great to be with you on a Friday after the New York close. So let me introduce myself. My name is William Gilday. I'm your moderator through the market. I'm sorry, the Friday wrap-up. We do the market opening preview series throughout the week, Monday through Friday before the London Open. Traders, I started trading in the year of 2006. In 2008, I retired from a wonderful 27-year career out of the Fire Rescue Department in the great state of Florida. Traders, 9 days later, came to Thailand for a 3-month holiday to celebrate my 27-year career. Well, traders, it's 2015, and I'm still here, and I'm still trading Forex every single trading day. Yep, I'm watching charts, I'm listening to fundamentals, and looking for opportunities with probabilities to benefit me to win my trades. All right, that's enough about me. Let's get over to legal stuff. We got a lot to do today, so no time to be messing around. This is off risk disclaimer. Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, very most importantly, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's jump on over to the commentary. Well, what is the commentary for today? Well, let's do the indices real quick. Let's see what happened at the close. The US 30 closed negative 0.78%. The S&P 500 negative 0.70%. NASDAQ in the red, also negative 0.62%. And the Russell 2000 negative 0.24%. After the close in the New York session. Going over to the Eurozone, the DAX closed in the red, negative 1.20%. The FTSE closed negative 0.90%, with the CAC 40 closing negative 1.41%. And the Euro Stoxx 50 closed negative 1.38%. Traders, if we come on over to Asia, Asia closed, the Nikkei 225 was up just barely at 0.12%. The S&P ASX 200 of Australia was just barely red at 0.20%. The Shanghai closed in the positive at 0.87%, with the Hang Seng in the green at 1.39%, and the Kospi, unfortunately, in the red at negative 0.22%. That is your indices update after the New York close. All right, commentary. Well, the only thing I can say is the dollar is still strong. The numbers out of the U.S. for retail sales came out strong. Didn't see a lot of big movement in the charts. However, what is the situation? I'm trying to figure out who's telling the truth and who is not telling the truth on the Greece situation. The IMF walked out of negotiations with Greece. So that doesn't tell me very positive things. Traperis, I think is how you say his name, the Prime Minister of Greece, is saying that they're going to have a deal by the 18th of the month, which is next Wednesday. I find that hard to believe. So, you know, I'm hearing from the IMF, the ECB, they're not even close to coming up with an agreement. And Greece is telling everybody, listen, everything's fine, and on the 18th we'll have an agreement signed and everything will be hunky-dory, and we will move on and move forward. So I'm just trying to figure out, like, who is telling the truth and who is not telling the truth, because to me, it doesn't look like they're close to an agreement when the IMF is walking out of talks. That is not a good sign. So next week should be volatile in our currency pairs, especially come Tuesday and Wednesday, as that deadline approaches. Now, they have till the end of the month, and I'm sure the IMF is wanting to know if they're going to get their payment, which they decided to put in a bundle, which is, I don't know, 1.6 billion, whatever, euros that they're supposed to be paying back to the IMF. And, you know, I haven't figured out how this is all going to work out. This is going to be pretty interesting. If I was playing cards and I was gambling, I would have to say This doesn't look good for Greece. I think they're going to default. Now, trust me, the Eurozone does not want Greece to default. They do not want Greece to default. If Greece defaults, there's going to be a lot of banks out of business, and I think Germany is going to take the biggest hit because in the last 10 years, Germany has bought a lot of bad debt from Greece, and they're going to take quite a hit. So they surely don't want Greece to leave the Eurozone. All right, let's move along. Got a lot to do. We're going to take a review of the daily charts. We're going to talk about these daily charts. What's the goal of this this presentation is we want to look at price action. So we go pretty quickly through these charts. However, I do have like 17 charts, I think, 18 charts that we're going to go through. But we're going to go through them pretty quickly, and we're just looking at price action. What we want to do is we want to see what's going to happen in the week ahead. So let's get started, and this is the euro dollar. And the euro dollar the last 5 days has been sideways. However, I think the biggest thing to take note is that the last 4 days, Tuesday through Friday, all these pairs ended up with indecision candles. Wicks are bigger than the body. That's not a good sign. Those are indecision, and it's sideways. So, however, as a pair, this pair is still bearish. This pair is still bearish. This is not a bullish pair. There's no change of trend here. You know, I'm a very big Twitter person. I tweet a lot during my trading day. And there is nothing here that tells me that the euro is in a change of trend and is now bullish. It had a couple of up weeks, but on the whole, it's still to the downside, and it hasn't taken out previous highs, as you can see on the chart. And the 200 exponential moving average is still quite away from price and hasn't done anything. So we go to its counterpart, which should do the opposite of what it's done. That is the dollar Swissy. So let's take a look at that. Here's a dollar Swissy, and the dollar Swissy has done absolutely nothing. Now, these are daily candles, so these, there's a lot of pips in some of these candles. But basically, the dollar Swissy is doing the same thing as the euro, and that is what? Just hanging out sideways. No big issue, right? We expect that, and that's what it is. The dollar, of course, is stronger than the Swissy. So, I don't trade this. I'm not interested in trading it. It's not a pair that moves. It just sort of like mingles around. It has really no price action of my interest. So let's keep moving forward as we take a look at the pound dollar, which I do trade most of the time. This pair is bullish. Yeah, that's right. It is bullish. That 2 weeks or just under 2 weeks of downside is just a fib of the swing from the top of the chart to the bottom of the chart. If you fib that, you'll see you're probably about at the, probably the 618 fib, somewhere around there. So it's just fib this, and now we have a blue candle to the upside. It's closed on Friday above the 200 exponential moving average, and I am, believe it or not, bullish in the pound. And when we get to some of the other pound pairs, you'll see why I'm bullish in the pound. Okay, let's take a look at the dollar yen. Dollar yen is a great pair to use if you don't have the dollar index chart or on your platform. Just use the dollar yen. It just gives you an idea of what the dollar is doing and how it's working. I do have, that'll be the last slide that I show you, will be the dollar index chart. And you'll see that it's almost identical to the dollar yen. So this is a good tool to use for this dollar yen. I don't normally, I haven't traded this in quite a while, the dollar yen. I use it as a tool, and I don't use it as a trading instrument. It's not one of my pairs that I trade. However, the next pair I do trade on a regular basis, and that is the euro yen. The euro yen has resumed its bullish motion. Had a couple of down days during the week, as you can see. My big concern is that Thursday and Friday, we have two dojis. Now, the yen is weak against everybody. The dollar, the euro, the pound, right? The yen is just weak, weak, weak. And I'm expecting that they will do an intervention or whatever you want to call it, a stimulus. They're going to inject something into the economy to get the economy to keep moving. They can't afford this to stop moving, so they're gonna inject into it. The yen is too weak, and they want to bring it back up again, and it's going to happen when you least expect it. So when you're in a yen pair, just watch out for that. Check out this. This is the pound yen. Wow, do you think this is bullish? Yeah, there's the pound. There she goes. Actually spiked the resistance level of the 5 days before it, and it looks like it might have closed above it. It's pretty close. So, bullish, bullish, bullish. All we want to do is buy this. I would see a correction probably going to happen at some point, but this is in a range right at the moment. So this really isn't in a trend. This is in a range, so I wouldn't be worried about a retrace right at the moment. Tuesday will give us a good idea of what happens. Never use Monday as a a forecaster for like what's going to happen that week, because a lot of traders haven't responded to Friday's trade, and the IMF walking out of negotiations with Greece is not good. So we'll see how the markets react to that. Here's the Aussie yen. This pair is a pair I do trade. This continues to be bullish. The yen is weak. The Aussie is strong. However, price action is pretty ugly. If you look left of the chart, there's really been no breakouts, nothing going on. But like I said, these are daily candles. So take a look at that blue candle. That's probably a 70 pip candle right there, or an 80 pip candle. So just realize that these are daily candles, and there's a lot of pips in these candles. So we're stuck on the 200 exponential moving average. If you take a look left of the chart, you'll see all the time it's hit the 200 and could not close below it. That's something to take note of. And if you're going to trade the Aussie yen, please, of course, you want to take it to the upside. Let's take a look at the Aussie dollar. The Aussie dollar is bearish, bearish, bearish. We did have an interesting week with the Aussie dollar. It did give us a couple of up days. Now it's in this nasty range on this daily chart. It's still, it's still bearish. It's not bullish. It hasn't taken out any significant highs. We closed with an indecision candle on Friday. To me, this looks like this is just going to continue to the downside. Probably come back down to this 7610, probably 7600 at some point next week. I think this is just going to continue to the downside. I don't think the dollar is going to get weak. I think the dollar is just going to increase in its strength. It's really gone above maintaining. It's starting to obtain more strength as they get closer and closer to putting out the big bomb when they're going to raise interest rates, which I would expect September, October, or November. But before the end of the year, I'm sure we're going to see the Fed raise interest rates. And to tell you the truth, I'm not sure when the next FOMC meeting is, but it should be interesting. Here's a euro pound. I don't trade this. Again, I use this as a tool, and you can see that the pound is a lot stronger than the euro in this chart. It's in the downtrend. Again, it's in this nasty range, and if you look left of the chart, if you were trading daily candles, this is not one that I'd want to trade, because I'd be worried that this is going to bounce off of this support area and head on back up towards that 200 exponential moving average. So I'd be really careful if you're trading the daily chart. And there are a lot of traders that trade the daily chart, and man, I think that's great. This is another pair that I do trade, is the New Zealand dollar, and can you get any more bearish than this? This is just absolutely bearish, bearish. There's only one thing to do if you're going to trade the New Zealand, and that is to sell it. Dollar strength. Now, their next meeting, and I think it's this week, they are going to probably increase interest rates, so by 25 basis points. So be aware of that. But I think it's this week that comes out, so we'll see a bounce there when that happens. Okay. All right, let's move over to the loonie. Let's look at the CAD. The CAD had a nice upswing there. This is a bullish pair. It's had its correction this week, and now Thursday, Friday, you can see that it's given us higher highs and high lows. And we'll just look for this to continue to the mission back to the upside. It's basically fibbed that last swing, and it's hit support. If you look left of the chart, that wick on that red candle, look left of that, and you can see that it's definitely support, and it's reacted to it, and it's bounced to the upside. Take a look at this pound Aussie. Wow, just bullish, bullish again. Here's a pound pair again, and yep, there she goes. It is bullish. The pound Aussie is bullish. I enjoy trading this pair. However, it's been taken off of my group of 8. And that is, for some reason, the spread on this pair is like crazy. I mean, it's like 7 pips, 6 pips, or something like that. I don't know why. I haven't figured out why. And the pound yen is like, 1.2. So I haven't figured out why the pound Aussie has such a huge spread, but the spread is really bad on this. And I stopped trading it, and I've taken it off my list. It's probably about a month now that I have not traded the pound Aussie. And I like trading it because it moves. When it's in its mode, it does a really nice job. All right, let's take a look at the Euro Aussie. Another nice pair. I do trade this. This is on my list of pairs that I trade. Nasty week. It was, I didn't take any trades on this at all last week. And to be honest with you, all my profits last week and all my trades last week were all on the euro dollar. That's all I traded last week was the euro dollar. But if you take a look at this, this is in a sideways range, nasty. It's bouncing off support now. So I would expect to see a red candle come the beginning of our trading week at the Asia session. And like I said, never judge on a Monday. So we'll wait till Tuesday to see exactly what's going on and see if this is going to continue to the upside. But looks like it. Looks like we're going to bounce here and just continue upwards. Here's the U.S. dollar, this dollar index chart. We had that down time where everybody said, oh, the dollar's, falling apart again, and here we are. Take a look at this chart. It's in an up mode. It's bounced off of support. If you look left of the chart, just bounced off of support. And it's just going to keep up, maintaining. It's going to probably go back up to the 200 and, it's just going to do its fib thing. It's going to do its thing, and but the dollar's going to obtain strength. It's not going to lose strength. Traders, just want to remind you that this is brought to you through FXCL Excellence in Trading, and please come visit us at fxclearing.com for your trading solutions. What a great platform, a great site. There's a lot of good stuff on there. Please check it out. Traders, on behalf of myself, William Gilday, and of course our great friends at FXCL, I want to thank you for joining me for the Friday wrap-up. And always remember, Monday through Friday, we have the market opening preview every single trading day before the London Open. Traders, enjoy your weekend, and coming to you live from Pattaya, Thailand, cloudy, rainy skies, and we'll catch you in the next Asia session. Take care now. Bye-bye.